In India, the railways are more than just a mode of transport. They're a way of life. The Indian Railway Catering and Tourism Corporation, fondly known as IRCTC, is the backbone of India's massive railway network. It handles everything from ticket bookings and catering to travel and tourism services. Back in 2019, when IRCTC went public, investor enthusiasm was through the roof. The IPO was oversubscribed by a staggering 112 times, and the stock delivered a blockbuster listing gain of 128%. For a while, it felt like this PSU stock was on an unstoppable journey, peaking in October 2021, up more than 300% in a single year. But since then, it's been a bumpy ride. With government interventions, declining internet ticketing growth, and rising competition from the aviation sector, IRCTC has faced some serious headwinds. Despite its strong fundamentals and monopoly-like position in key segments, the stock rally did not last long. Since the end of 2021, the stock has experienced sharp volatility. Despite a short-lived rally in early 2024, the stock has trended downward and is trading at nearly 34% below its all-time high. So what really happened in these past 3 years? Is IRCTC still a stock worth tracking? Let's find out. Welcome to Bottom Line by Groww. I'm Radhika Bajaj. And in today's episode, we'll analyze IRCTC, which was once the darling of investors. The Indian Railway Catering and Tourism Corporation holds a unique and powerful position in India's infrastructure landscape. And there's an apt tagline too: Lifeline of the Nation. A central public sector enterprise under the Ministry of Railways, IRCTC enjoys a statutory monopoly in several railway-related services, from online ticketing and catering to packaged drinking water and tourism. So understandably, when IRCTC hit the public markets in 2019, it was a massive success. This wasn't just hype. The IPO mania was well justified, backed by IRCTC's solid fundamentals and a strong growth runway ahead. The increased government investment in railway infrastructure, including new routes and the rollout of private trains, opened up fresh opportunities for growth for IRCTC. The company also posted strong net profit and revenue numbers over the years, especially post-pandemic, signaling a strong recovery. Now, despite such solid fundamentals, the stock corrected and investors' interest towards IRCTC waned. Why? Where did it all go wrong? IRCTC earns income by charging a convenience fee for offering various services to its customers. It retains 100% of this fee, and this is the company's primary source of income. It charges 15 rupees plus GST for non-AC classes and 30 rupees per GST for AC classes, making AC class bookings the highest revenue generator. Now, back in 2021, the government initially decided to take a 50% share in IRCTC's convenience fee earnings. This would have dented its future earnings. However, after severe negative feedback from shareholders, the Ministry of Railways withdrew the decision. And although the decision was rolled after the backlash, the damage was done. Investor confidence took a hit. This apart, the government decided to do a 5% stake sale via OFS in December of 2022. And over time, government ownership has dropped from 87.4% in 2020 to 62.4%, stoking fears about stability and strategic direction. These episodes reminded investors that despite strong fundamentals, policy risks loom large over government-owned companies. Does this mean the stock is unlikely to recover? Should investors be worried? What does the future look like for a near monopoly company? Before we get into all that, let's understand IRCTC's business model a little bit better. IRCTC operates through 4 main verticals. Catering contributes the lion's share of revenue of 46%, followed by internet ticketing, which accounts for 30% of revenue. Rail Neer and tourism account for the rest. Let's start with internet ticketing. Now, this is the crown jewel for IRCTC. The internet ticketing has transformed how India travels and has earned its place among the largest e-commerce platforms in India. The IRCTC website and Rail Connect mobile app, now integrated into SwaRail SuperApp, handle over 80% of Indian Railways ticket bookings. Launched by the Ministry of Railways, SwaRail consolidates various railway services into a single user-friendly platform. IRCTC also facilitates bookings for buses, flights, hotels, and tour packages. Though it accounts for just 30% of revenue, it delivers over 70% of profit before interest and tax, thanks to its low-cost, high-margin model. Then there's catering. With exclusive rights to onboard catering, IRCTC serves meals through pantry cars where they cook or serve pre-cooked food. Now beyond this, IRCTC operates food plazas, cafeterias, refreshment rooms at major stations as well. It also runs retiring rooms, AC lounges and budget hotels. In recent years, IRCTC has shifted to a licensing model, e-catering partnering with third-party vendors. Recently, the company tied up with Zomato and Swiggy as well to modernize its offerings. The company processes over 1 lakh meal orders per day and earns about 15% commission on orders placed through these platforms. Despite generating 45.5% of revenue, catering contributes only 19% of profit before interest and taxes, highlighting its cost-intensive nature. Then there is Rail Neer. IRCTC's packaged drinking water brand, Rail Neer, is another exclusive business. In FY24, 19 fully automated plants produced nearly 39.5 crore bottles. Rail Neer continues to expand to fulfill 100% of the railway demand via capital expenditure and capacity enhancements. IRCTC also acts as the tourism arm of Indian Railways. Backed by over 24 years of experience, the company offers a diverse portfolio of travel products, ranging from Bharat Gaurav themed trains and charter coach tours to luxury experiences like the Maharajas Express and the Golden Chariot. It even operates special trains for special events like elections and state events. But IRCTC isn't limited to just rail. It has steadily expanded into non-rail tourism as well, offering domestic and international tour packages, hotel bookings, car rentals, cruise packages, and even air ticketing. Now it's taking things a step further by tapping into the growing MICE segment. MICE, of course, is meetings, incentive, conferences, and exhibition segment, and this will cement IRCTC's position as a full-service travel and tourism provider. Now let's understand what the future looks like for this near monopoly company. One key challenge is that while IRCTC remains financially strong, its internet ticketing segment is nearing saturation, with 87.42% of rail tickets already booked online. This limits further growth in its most profitable segment. As such, earnings before interest and tax margins have shrunk 90 basis points Q on Q, reflecting the impact of the decline in revenue. So to combat stagnation, IRCTC is eyeing non-conventional revenues, including advertising, loyalty programs, and digital payment services. Further, the company has also applied for an RBI payment aggregator license. Its in-house payment gateway already captures 20 to 22% of transaction value across platforms. Once licensed, this could be a key new growth driver. Another development is the dedicated freight corridor targeted for completion by December of 2025. Once this is operational, it will ease freight traffic, freeing up capacity for passenger trains and improving IRCTC's catering and hospitality potential. Now, the one big challenge that IRCTC faces is actually coming from the skies. IRCTC faces growing competition from the aviation sector. Government programs like Udaan and the rise of low-cost airlines have made air travel more accessible. For shorter and mid-distance routes, many travelers now prefer flights, which continue to face long wait lists. This makes it imperative for IRCTC to scale its premium services, especially AC class trains, which continue to face long wait lists, and only limited people, about 5%, travel in AC trains. Efforts are already underway to boost demand and increase revenue. An example of this is Indian Railways converting most sleeper coaches on the Amravati Express to AC coaches. Similarly, the company saw its revenue from the tourism segment witnessing a 16% quarter-on-quarter increase as of Q3 FY25, driven by luxury offerings like Maharajas Express and increased business from the Tejas Express. Also, IRCTC plans to introduce 3,000 new passenger trains by 2027. While the company is taking steps in the right direction, the biggest strength of IRCTC is its financials. They are strong with steady growth seen every year. In Q3 FY25, IRCTC reported a 14% year-on-year rise in standalone net profit, and its revenue grew 10% year-on-year. The numbers reaffirm IRCTC's strong fundamentals even as headwinds persist. Recognizing its strong financial track record and operational efficiency, the government has awarded IRCTC the prestigious Navratna status in March this year. This designation gives the company greater autonomy to make investment decisions, enter joint ventures, and pursue strategic initiatives, unlocking new avenues for growth and innovation. That is, it can invest up to 1,000 crore rupees or 15% of its net worth in a single project without needing prior government approval. Annually, it can invest up to 30% of its net worth as long as it stays within the 1,000 crore rupee cap. This elevated status also paves the way for international expansion, allowing the company to set up overseas subsidiaries, enter joint ventures, and pursue strategic mergers to strengthen its market presence. Further, the valuation appears favorable for IRCTC. After trading at a lofty price-to-earnings ratio of 324 times in 2021, the stock now trades at a more reasonable PE of 50 times as of April 2025. Now, this is below its median PE of 67.8 times. So what's the big takeaway for investors? Well, IRCTC has shown resilience through the pandemic, policy hurdles, and changing consumer habits. Its monopolistic position, diversified service portfolio, and strong brand give it a distinct edge. However, caution is warranted with saturation in core segments, rising competition, and government interference. For investors with a long-term view, IRCTC presents a stable but moderate growth opportunity. But for the stock to be re-rated or for valuation expansion, the company will need to deliver on diversification, expand premium rail services, and build new revenue engines through digital and tourism plays. While there may not be any fundamental trigger for explosive growth, with smart moves and strategic focus, IRCTC could still be on track for a steady journey ahead. Maybe, maybe not. What are your thoughts? Leave them in the comments, and remember, for more such insights, subscribe to Bottom Line by Groww.